In this video I'll be showing you how to use technical analysis and the importance of technical analysis for trading. Technical analysis is very popular amongst traders. It helps them to get into trades and make a good profit, and also to exit trades as well. It's all about reading chart patterns really. And as the forex market is a $4 trillion day market, there's a lot of consistent patterns in there. So there's not a lot of with such a big sort of market and so much money being pumped in every day, it's very difficult to get it to be very volatile. So there's always consistent patterns that happen every day. A lot of people think that the forex market is volatile, and yes, it is volatile, but I think it's more consistent volatility. Okay. So yeah, and this is on the MT4 platform. So the tools I'll be going through are support and resistance lines, which you can see at the top left here, which is the vertical line there. We have trend lines, equidistant channels, and Fibonacci retracement. They're the ones I'm going to be going through on this video. So first of all, let's talk about support and resistance lines. Support and resistance lines are flat levels. So as you can see in the top left of the chart here, we've clicked on the horizontal line here, okay? And if you click and hold, you can see this moves up and down there. So you can either draw a resistance line or a support line. What we'll do here is draw a resistance line first of all. Resistance line is where prices come up to a certain price level and fail to break above, and we've had multiple sellers come in at a certain level. So here's a typical example of a resistance level here. This is on the GBP USD weekly chart. This is around the one spot 67.38 level. You can see multiple times around this level, and I'll just highlight these for you with an arrow, where price has come around. You can see once there. You can see twice there. I'm just showing you the amount of time that price has come up to this level and failed to make a clear break above and a weekly candlestick close above. So you can see 3 big times there where we've had price come up to this one spot 67.38 level and failed to break above. So it's a good area of resistance. Imagine it as a form of ceiling really. And the opposite to a resistance line is a support line. And this is where I'm going to draw it again. So you click on the horizontal line there, click and hold, and you drag it to an area where you think there's been a lot of buyers coming in. And there's a good level here. This is this 1.5258 level. You can see it a bit clear if we zoom in actually. The best way to draw support lines is just draw them where the candlestick bodies have failed to make a close below. Okay, so this is a clear example here of where we have had multiple candles fail to make a weekly candlestick close below this level. So it's once there, we've had twice there, 3 times there, and currently as we're making this video, 4th time is right at the minute. So it's testing this key level at the minute and it's failing to really get below this level. So that's how you draw a support line, and that's how you draw a resistance line. To delete these lines, or if you want to adjust them, you just double click and that highlights the line, and you can drag it up and down to where it suits you. And to delete it, you just right click and click on delete. Okay, if you want to delete the arrows, just right click on object list, and that's where you can also delete the support and resistance line as well, and just click on delete until they're all gone. Okay, so that's support and resistance lines. Okay, another form of support and resistance line is a trend line. This is a diagonal form of support and resistance. So what we'll do is draw a trend line support. Okay, and the way to draw a trend line support is it's very similar to support and resistance. You're basically looking for kind of 2 or 3 clear points where price has failed to really get below. And we have this example here where this is a current trend line support. Where we've had the first area is the first area is this one down the bottom here, where the trend line starts. You can see an arrow there, and then the second point is around here. And we've also had 2 candles there as well. If you zoom, you can see there 1, 2 candles on that line. So I mean, a lot of people just do it from where candlesticks. So if you're looking for 2 clear candlesticks that haven't pierced a certain diagonal level, then that's your trend line. And currently, as we speak, similar to the support and resistance line, actually, we are testing this trend line support as we speak. There's a third sort of area now where we are now. So that's the trend line support, and trend line resistance is basically just the complete opposite, really. So instead of that previous resistance line, you can actually classify that as a trend line resistance. Actually, no, an easier point, a more clearer trend line resistance, a more diagonal line, is this example here. So we're looking for kind of 2 or 3 clear points. Got the first one here. I'm just clicking and drawing there. So it's a nice diagonal line where prices failed to clearly get above that trend line resistance and post a weekly candlestick close. Okay, so that's a form of trend line resistance, just a different form of ceiling, really. Like the resistance line, this is just a trend line resistance. Okay, to double click to delete that, you just double click to highlight it, then right click and then press delete. Okay, now we're going to talk about equidistant channels. Equidistant channels are a form of trend line, but they've basically got a trend line resistance and support on the same chart. So what I'm going to do is show you how to draw one. I'm going to use the same trend line images we used before. So what you do is automatically click and you hold there to draw it, and automatically it brings up some an equidistant resistance zone, but that can be adjusted. But this one isn't too, actually that's not too great. So what we're going to do is we're going to adjust this top. Okay, so we have the trend line support, and then to adjust the top, you double click and you can see the circles highlighted there, and you can move this to adjust it. And as you can see here, do a similar thing with the trend line resistance, as you're looking for an area where prices fail to get above, and that's a good sort of area there. If you zoom in, you can see multiple times we've failed to get above this level, and it's working in some in a diagonal sort of way. You can see this around this level here. We've had multiple candlesticks test this level, but failed to get a weekly close above it. Okay, and to delete that equidistant channel, you just double click and then right click to press delete. Okay, so an equidistant channel is where you have a trend line support and resistance, and prices going between those 2 levels, and unless you get a breakout where you get a candlestick close below, that's when the channel is obsolete. Okay, let's talk about the Fibonacci retracement tool. Fibonacci retracement is very, very important, very, very popular amongst professional traders. They kind of create future sort of support and resistance lines, and especially when you've had a strong up move, you tend to get a retracement. So then a lot of people look to buy on the retracements, and this Fibonacci retracement tool can help you identify the right retracement level. So what we're going to do here is we're going to zoom in and look at the recent a strong up move where people would have been looking. I'll tell you what, let's look for this whole, let's use this whole up move actually. So what you can do is use the whole up move or a recent swing. Okay, so what we do here is just draw a Fibonacci retracement. You draw it from the low to the high, so you click and hold the left mouse cursor. You draw from the low to the high. I've actually got my custom settings on there, so I'll quickly switch to the default settings. The default settings are automatically, you have the 0% line, you have 23.6, 38.2, 50 spot 0, 61 spot 8 and the 100 spot 0. Okay, so the first retracement level is the 23.6, that's the 23.6% retracement from the whole move, and you have the 38.2 and the 50 and the 61.8. And you can see, if you look around the chart from the first from initially when the move was drawn, we're looking over to the left here, and you can see we had automatically had a nice bounce off the 23.6 there, where you could have bought and made some pips. And then the second bounce, it reacted very well to the 38.2 there. You can see that. We didn't get a bounce off the 50%, but we did get a bounce off of the 61.8 around here. And then as you can see, recently on this chart, we've also had nice bounces off this 50% level. You can see, you remember that that support level that I drew earlier, that was actually the 50% line. So talking about Fibonacci levels creating future support and resistance levels, that's a prime example of how a future support level has been created via the Fibonacci. And you can also see that they do act as resistance levels as well. Previous support turns into resistance. You see that 23.6 right there acted as resistance there. So a very, very useful tool, and very good if you if you like to trade levels. And these are very, very good levels to trade. The best way to trade them is just to kind of look for candlestick reversal patterns, really. So if you go to the previous example there, these previous arrows, well, the recent one there, that's a bullish engulfing candle. You could have waited for that candlestick to close and then buy as a confirmation. And we have this candle around here. This is pretty much a bullish hammer, not quite hammer because you do have a bit of red, do have a bit of upper wick. But you can see the long lower wick candlestick is a sign that buyers have come in off of this level to the pip. Look at the previous examples. You see a nice bullish engulfing this candle here. Nice bullish engulfing candle that you could have bought and made some pips. And also this little candle here, this hammer, you could have bought straight after that and made some pips. That's a great example of how Fibonacci retracements are very, very important. That's why people use them. The best way to use them is to draw them from the recent swing low to swing high, or you can also use the big moves there. But basically the obvious swing low to swing highs and the swing high to swing lows are the way to trade it, really, because that's what everyone looks at. So price tends to respect those levels well. Okay, I hope you found this video useful. Make sure you look at the rest of the videos, and I hope your trading goes well via use of technical analysis. Thank you.